Okay, so it's just the support and resistance. So let's look at TDD. All right. So this is TDD. We was looking at this for those. TDD is the trade desk, is the name of the company, and what we're doing is just looking at this stock because Sharif wanted to take a look at this one. So I'm just trying to get the chart big enough so we can see what we can see. All right. So you can see I've already marked some support and resistance lines here, Sharif. So if I'm just looking here, so just based upon the little bit that I showed you already, what can you infer from this chart that you see?
All right, let's see.
Let me take out a little bit of this clutter here. That's fine. You can take that one out. Yeah, I'll leave that one. That's fine. Okay, go ahead.
I don't know where to start. I guess we're looking at the top part that that's a ceiling, so that's resistance at
Yes,
the top.
sir. Mm-hmm.
And you got your resistance, you got your support under it.
Mm-hmm.
And I don't see any of the double or triple bottoms you were talking about.
Yeah, not quite horizontal, but you could say got a bottom there, got a bottom here, got a bottom here. So they're not quite on scale. So if I wanted to draw a line, it'll be ascending a little bit, right? But but still, I may be able to infer something from this, right? If we were to look at that. So I can say, I probably need to draw another color. Sorry about that. I need to give a different color, my support resistance. Okay. All right. So you can see here, it's not quite a double bottom on the horizontal, but it's close enough. Because if I was actually looking at this to make this trade, I would just take my 339. I mean, I'm 739, 740. If I was looking at this now. If it didn't hold at 740, I wouldn't give it a whole lot of room, because if I'm wrong, I don't want to be wrong in all this white space and it goes against me, right?
Right.
So, you have to look at your stops. So stops are important. So a stop is nothing but saying that, hey, I want to be able to, if I put a trade on, I get into a stock and I'm actually in the stock. If a stock starts to go down below a point that I'm not comfortable with holding anymore, you can put in an order that's called a stop, meaning that if the stock get down to, say, we put an order in at 728. If the stock got down to 728 and pierces that point, then the brokerage will change that to a market order on your behalf and try to get you out as close as possible. So that's what a stop order is.
Okay.
All right. So
a stop order is a safeguard, pretty much.
Yes, sir. Yes, sir. Absolutely. So it's a stop loss. You want to stop the losses from where you are. And sometimes a loss may not be a true principal loss. A loss could be that you have a gain in the stock and you don't want to give up some of the gains that you've incurred. So let's say, for instance, if you were here at 737, the stock went up to 947. You say, you know what? I don't want to give all that up. I'm gonna put a stop in, say at 880, right? And if the stock starts to retreat, and if let's say you were in here, then it opened up at this point, you got your order in at 880, keeps coming down, keeps coming down, keeps coming down. It gets to 880, it's gonna trigger, it's gonna turn into a market order, and the broker is gonna try to get you out as quick as they can around that 880 price. And sometimes you'll get a little slippage, meaning that it may not come in right at 880. It may come in at 779, 777, so that's what slippage is called.
Okay.
So this is so what I do is I got a bunch of stocks over here in my watch list. I mark up all my charts with support and resistance. And then I'm just going down here and looking to say, okay, do I find something that's at a good resistance part that I want to take the trade on? And typically if I mark it and you see I got circles here in yellow, these are areas that I'm looking to put a trade on. And this is just one style of trading, right? I got a buddy of mine that trades completely different than what I do, and he's successful at it as well. but this is what I'll do. So if I'm looking at this tonight and I say, okay, all right, I missed this trade. This was 3 days ago. So I guess that was Tuesday. That would have been an entry price, but let's see if we can find anything based upon the day that will fit the bill. That looks good. And all I'm doing is just, I've got it marked up. And so once you do your work and marking these up, just going through your charts on a daily basis, once a week or whatever, depending upon how much time you put to this, it'll give you an indication and you can start looking at stuff, right? So here's one, Boeing, all right? I didn't take, I'm sorry, I'm on a weekly chart. Let me go to a daily, all right? That was earlier in the week. Let me keep going down. Sorry about that, I was on a daily, I was on a weekly chart. Let me see if I see anything. Okay, here we go. The wives might like this, right? Bed Bath and Beyond. I'm getting real close to this 27 bounce, right? Now, let's look back to the left. Let's see how much history I got here. So 3 days, 3 days ago, I was here. It bounced, it came back up. It got only up to $2, and now it's retreating back down, right? But look at the previous history. I'm in this area of range. So now this is where you have some discretion when you're drawing these lines. You can say, you know what, I drew it right here, but maybe I really need to readjust this line down a little bit if I'm not comfortable with there. Or you can either readjust, I'm trying to move this, not moving for me. I can either readjust this blue line, this blue support line down here, if it will hold for me. There we go. To that point where I'm lined up with this point here, and maybe come down and give me a little more and say, you know what, I might not want to buy until it gets to this $24.99, because what will happen is my stop loss can be a little bit lower, say here at the 24 level, right? I say, okay, I'll give it 97 cents to play with if I'm going to enter at 24.97. But if I'm wrong, I want to be able to put my stop loss in probably at 24, because I don't want it to go down to like 19 if I'm holding 100 shares and I lose $4 on 100 shares. It's $400 loss. You see what I'm saying?
Right.
Okay. All right. So that's just kind of a quick rundown of how we use these charts and stuff of that nature. Let me see. So Darren, give us a quick intro to who you are, and we'll ask you a couple more questions from there.
I'm Darren Branch, Michael's brother-in-law. I'm just getting into stocks, so I'm just trying to see if there's something else I want to throw my money into. But I'm just trying to gain interest in it.
Okay, cool. So yeah, thanks, Darren. Yeah, Sharif, just a reintroduction. Well, I guess Darren's the only one on. I think Kyle must have dropped. I know he said he wasn't going to be on long. That's all right. You don't have to do it because there's only one other person here. Okay. Yeah. So with that, that's kind of like the basis of what we go through. So Darren, I want you to go out here to tradingview.com. I'm going to put this in the chat. This is what I'm showing on the screen. Let me put this in the chat so you can have it. And I want you to go out here and set up an account there. All right, set that account up. It should be a free account. And matter of fact, I'll walk y'all through it real quick. Let's do it. Let me log out. So go back here. I'm gonna just log out.
While you're doing that, just a quick question. So when you're swing trading, do you swing trade on any other stocks that you keep long term? Like, for example, like I was able to get Trade Desk when it was around 4 something.
Okay.
So now it's hovering around 8 between 8 and 9, fluctuating.
Mm-hmm.
So I was viewing it as a long term hold.
And that's perfectly fine. So great question, and I'm gonna answer it in 2 different ways. One, that I read this book some time ago. It's by this guy named forget his first name. I think Richard Elder, and he's a psychologist. And he talked about trading. He wrote this trading. He's a trader, but he's also a trained psychologist. And he said, one thing about the market, whatever your kind of personality makeup is, the market is going to bring it out. And so you're like, well, how is that an answer to my question? And the reason why it is if your demeanor is that you're more a long-term type person, you buy something and you hold it, then I would tell you to work according to whatever your demeanor or your makeup is. If your demeanor or makeup is you like to take quick profits, you don't want to leave, stuff out there for a long time, then, that may suit you better. So the idea of it is you can do one or the other, or you can do both, but you're going to have to figure out what works best for you, what's going to allow you to be most comfortable, what's going to allow you to sleep well at night.
Got it.
So that's why it's a, not a straight answer, but it kind of a depends answer.
No,
and I tell you that because once you get all the mechanics down of, okay, putting a trade in, drawing your charts, figuring out where you get in, putting stop losses in, getting comfortable with the order types, figuring out, how big or how small you want to go in, kind of managing your portfolio, not taking too many hits on wrong plays. Once you get all of that down and you get, pretty good at that, then it becomes a mental game. And it's like, okay, now your emotions, because you know how to do the stuff to get in and out of trades, now it becomes emotional. And sometimes, Ken and I, we were talking earlier, and we were talking about this stock. And I was like, yeah, I wanted to get into the stock and I just wanted to buy a few. And he's like, yeah, I want to get into stock too, but I didn't buy it because I was scared, And so that happens. So you have points where you're too confident and you may buy something more than what you should, and other times where you're too scared and you won't buy any when you should have bought. So they run the gamut.
Right.
Okay. So if y'all go out to tradingview.com, you can go to sign in. If you don't have an account, you'll see down here at the bottom, it says sign up. You go to sign up. And it gives you the same screen. I have a Google Gmail account, so you can sign in with Google. You can sign in with your Facebook credentials, or if you don't want to do any of those kind of assist account creation deals, you can just go here to username, put a username, password in, sign in. Once you sign in, it's going to give you the ability. So I'm just sign in. Then it's just going to redirect you to their home screen. And then what I do when I get to the home screen, I always go to here where it says chart. I just click on chart and it's going to take me to this screen. And on the screen here, you're going to have your drawing tools in this toolbar to the left. You're going to have the stock ticker here. You may not have any dates here. If you don't have any dates here other than day or something else, you can click this little drop down. You can go here in any of these areas that you want to highlight and add as favorites, because all of those are favorites. Just move your cursor to the right and you just click it from uncolored to yellow, and then it will add it here in your toolbar, right? Keep going, this just tells the different candle types. I just use candles, different line types. So I just use candles. You can compare against other stocks or symbols or indices if you want to. You can use different indicators. We'll talk about that. I use one other indicator a lot on my charts. I don't typically use it to trade with, and that's kind of another trading style I told you my buddy talks about that I'm a bit familiar. But there are a bunch of different indicators that you can use. So if you follow YouTube, go ahead.
When you speak indicators, is that stuff like the MACD and stuff like that?
Yes, sir. MACD, okay. RSI. Yeah. So like if I type these in there, so like you said, MACD, you see it there. You can do RSI, you can do stochastics.
Got it.
Yeah. If I can spell. Yeah, stochastics. You can do RDX, ADX. Yeah, advanced decline. There's a million different indicators. And if you have some that you've been charting and stuff with before, you can throw them on your chart. I personally, most of my charts look like this. This stock is really not traded well. Let me go back down to a name that has some volume so I can show you here at the bottom. What you see here down at this very bottom here with this blue and this kind of shaded orange area with these orange and green candles, what this represents is volume. volume is, we don't talk a lot about volume, but we will, I will at some point, because volume plays a role into this. And volume is just basically how many shares traded within that particular bar. So if you do your vertical, so if I go here and I zoom in on this green bar here, you can see for that day, there was, I don't know, a couple billion shares traded on this day, you know, for Apple. And this is back in March 23rd. So this is actually the pandemic. It's pandemic low right here. Stock hit $53. Look at it. Where is it now? It's 136. So you're talking almost a three bagger, almost 300% up, two and some change. So if you caught it down here, you're pretty happy camper. And you know what? And this doesn't even represent the split. So they did a split in August. So it's actually 4 times that. Well, it's split adjusted. So never mind. It's split adjusted. So it's still around a little bit less than 300%. But your actual number of shares that you would have would be 4 times more than if you were in at this point versus where you are today. I mean, 2 times more, because they actually did they either did a 2-for-1 or 4-for-1. I don't remember in August. If anybody remembers, it may have been a 4-for-1.
Apple did, it was 4-for-1.
Is it 4-for-1?
I actually had Apple when they split.
Okay. Yeah, good stuff. Yeah, so you was pretty happy in August then if you held Apple.
Right.
Yeah. You know, so that's kind of it. There's some more stuff here. You don't really have to worry about the rest of the stuff on here. You got your watch list to the right. This is pretty important. Like I say, if you want to add anything to it, you click on the chart here. You add it, you know, just click stock. Say if I wanted, let's say Best Buy, BBY, I can click Best Buy. I can add it. You'll see it get added to the bottom of my chart here. And then if you want to sort, you can always click on symbols. You can sort these in alphabetical or descending order. You can do by percentage change, up or down. If you want news on, that's this bar here. So if you highlight over, it tells you what it is. You can set alerts. You can look at news, look at a data window, hot list. You know, actually some of the stuff I never even looked at. Okay, it's a hot list. Never even looked at that before. I usually just have on my watch list, and I'll have news on. Those typically only 2 things I have over here. But whatever these tools over here, if there are things that you can use that help you in what you need to do, by all means use them. I just don't use them personally. And then, you know, the rest of the stuff here is just a little toolbar. So a bunch of my drawing tools. So this is like a line, so I can draw a line here. This is the little rectangle box, or you know, you can draw them either way. This is my little ellipses where I was drawing my points before to make my circles. I think this is Elliott Wave. You know, so if you're in the Elliott Waves, it's pretty advanced here. I don't really fool with Elliott Waves personally. I know people that talk about them and believe in them. I don't follow them enough to really talk intelligently about Elliott Waves, but you got a tool there. You got Fibonacci's. I do use fibs from time to time, and you know, we can talk about those at some point. But you know, the charting tool has it there for you if you need it. Let's see what else. Then it's just the crosshairs. If I want to get back to crosshairs, if I want to use a pointer, I can use the pointer. If I need to put some text in, you know, hello Voxer.group. I can add that, because if I want to annotate the chart to be able to show something, if I wanted to measure how much is the percent from this point to this point, I can measure. I can see that's a 40% move from 57.81. Tells me it's a 40% move. I can do it vertically. I can also do it horizontally. If I want to go here and go horizontal, tells me how many bars to the right or to the left. So I can do that. So if I was charting that, if I did it like this to tell you the area that I'm actually looking at. So if I make that, it doesn't save on that. I don't know how to make that stick, but you can go up or down there. And then if you're looking at, you know, so there's a bunch of other things, so you can just, you know, give it a go through. Like I said, it's a pretty powerful charting tool. I like it versus using the charting tools that come with my brokerage, because I can just bring up a web browser. I don't have to, bring up the software for the broker. And it's because a lot of times I actually trade on my phone. I trade on my phone through my TD Ameritrade, and then I trade through the browser for my Schwab. So I got a couple brokerage accounts that I trade with. So that's kind of it on the charting. And again, just start developing your watch list. This is key. And one thing I'll tell you is, once you start to learn the price points for your particular charts that you follow, having that knowledge is really valuable, because charts can get to a certain point, or stocks can get to a certain point on a chart. And just by you having followed it for a long time, it's a buy. So for instance, I've been following UPS for a long time. UPS get to 155. At this point, it's a buy. You don't even think about it. Buy that 155 and see where it goes from there. You should make money if you don't mess up the trade, right? So here, 155 to 175. Here, 155 got up to 163. Back down to 155, got to 164. Actually, I was in this trade at 155. I just sold yesterday for 161 and 160, I think, 160 and 161, something like that. But that's just because I know where it trades at. So I don't even have to look at a chart for somebody to tell me what the price of UPS is. And this was an area that's in recent months, that this 158, but where the price part used to be is this 105. It says 103 here, but anywhere 103, 105, you could have made money with this in this area as well. And so let's see even how far that worked out going to the left. So I told you 105 without even showing you that part in the chart, right? So I can go here and just draw this out and just show you how many times that 105 area was money. So you can say 1, 2, 3, 4, 5, 6. Just by knowing 103, 105 was an entry point.
So each one of them would have been a separate transaction.
Yes, sir. Buy here, sell here. Buy here, sell here. So even if I said that, okay, so good point. So if I say, you know what, if I pull this support line down to where it hits on each of those, it'll give you the exact exit for all of those trades. So I could have bought at one, let's see where it intersects with each of those points. 103.27. And so bring it down just a little bit to get all these in. 1, 2, 3, 4, 5, 6. 6 trades from 103 to 116. Then you say, okay, what's that percentage, right? So you say that that percentage is 12%. 12 times 6, 72%. 6 trades. 6 trades at 12%. So 72% gain, right?
Wow.
And that's because I know where these price points at, right? It was in that band. And look at here, when it finally got up enough momentum, and this is actually based upon earnings. This is an earnings play. Earnings came out, they did phenomenal, and it just broke through this previous support, broke through all of this crap that it was down here, and went up. Excuse me one second. Let me see who joined.
Just me back.
Oh, you back? All right. Yeah, what's up, Kyle? Previous point where it joined, and now it just established a new area at 155. And so now I just want to see if I can repeat this kind of stuff here at this 155 level. So just looking at what we see here, this is as 1, this is 2, this is 3. All right, what's that percentage level? Not as quite as big as what we had before, but I'll take it. So you go from 1, so you're talking about 5%, 3 times, 15%. If a money manager makes 15% on the stock market, he's a good money manager every year. And we talking 15%. Now, these returns, now you have to take everything into proper consideration. The market that we're in right now is absolutely insane. This is not normal. So I just want people to realize that what we're experiencing now is not normal. This doesn't happen. I mean, if anybody go back and chart their portfolio literally from January 1st of this year to now, if you're down, something's wrong. It's just that simple. If it's down, then you need to look at either who's advising you or what you have picked and selected, and start picking and selecting some other things. And we got a bunch of ideas that you can go on, because if you're down, you shouldn't be, because there's too many opportunities out here that are just ludicrous. So I'll stop there. Anything y'all want to share, y'all want to talk about? It's kind of open forum. Oh yeah, let me stop there and y'all respond. And I got one other thing I want to cover.
I bought some DraftKings this week.
Yeah, all right, let's see. Let's look that up. DraftKings. Okay, I want to add this to my watch list. Somebody tell me what I need to do to add this to my watch list and trading view.
Right. So click on the plus sign on the watch list.
All right.
Type in the ticker symbol or the name.
All right.
All right. Click on DraftKings and then click on that plus sign.
All right.
Should be added, right? Yep.
All right. What do I do next?
Oh, go down to your watch list at the bottom and click on it.
All right. Very good. Very good. All right.
Awesome.
Somebody walk me through and draw the support resistance line. Look at the black price points on here. Tell me where to draw them and I'll draw. So that's anybody who can see the screen. Kyle might be on the phone, so he may not be able to see.
All right. So I guess if you was gonna draw a resistance, no, that's the selling. So I need the support. Support would come down to, is it around between 34 and 37?
34, 37. Somebody help him out there. Where would y'all draw that? Fine tune that for him.
Oh,
Somebody.
Yeah.
or up between
right
49
there.
and 53?
Can say right here at 35, 36.
Okay.
Yeah.
All right.
I'm gonna say
Any,
more like
any
34.
say what?
I'm gonna say more like 34.
Kyle say 34. So actually all of y'all are right. This is where charting, you have some discretion. It's your personal preference. None of this is wrong. I can draw it. So let me draw all three of those. 37, 34, 36, and then let's just say right here, right? I can go with all those, because it really is a range, right? Because you're trying to incorporate this stuff here and this stuff here, right? So, let's split the difference and go half in between, up and down. I can go with that, and I'll probably be a little bit more inclined to take the most recent a little bit better, right? But I can do that. Or if I say, you know what, I don't know which one, let me take them both. I can do this. But that's where you have discretion as a chartist, right? Somebody give me the resistance at the top of the chart. Darren, where you think? And no wrong answer. I just want everybody to kind of get involved, because when you do this stuff and you practice on it, this is what's going to help you to do it. So if you're saying, where would you look at being a resistance part on the top of the chart here at the price points?
Maybe around 53.
Say 53. All right. Anybody?
Well, a little higher, but
okay. Tell me when.
oh, that right. Yeah, go down some.
Come down.
Because aren't we looking at like those the tall candlestick, the green candlesticks that's long? They've already broke through, right?
Well, so a resistance point. If I were to draw this, I would say this would be resistance.
Okay.
That's where I put my resistance, because those are at the top point. So think about it this way. We don't have enough data on this one here yet, but we can say this one we do, because we saw the next point, it retreated, right? So if this is true to form, well, actually it only has two options. Well, three options. It's either going to go higher, it's going to stay the same, or it's going to go lower on the next bar, right? So all I'm saying is there a high degree, or again, this is a probability, it's not absolute, will this actually hold and reverse, or will you break through? I'm more comfortable because I have a other horizontal support or resistance point that matches it at that level.
Okay.
So that's why I would draw it at the top. Does that make sense?
Yeah, it makes sense.
Okay. Where's another resistance that on this chart? Is not as clear, but where's another resistance point? I see two of them.
Well, just about where the mouse is, that little hot.
You'll draw
right
this
there,
one?
right there.
All right, so I still see two more.
Oh, okay. Well, that wasn't one then, huh?
No, that was good. No, that was decent. I mean, but again, you just drawing it. So let me just draw the two that I saw. I draw this one here, and I'll draw this one here. And I'm gonna show you why. I'm saying it's the resistance points. I'm gonna show that right there. Why I drew this was this point here and this point here. But you wasn't wrong, Sharif, because you can just say, oh, that's resistance. It's resistance when you coming down from below. Once it breaks through, previous resistance becomes support. And that also works in reverse. Previous support, once you break below it, becomes resistance when you're trying to approach it back up again. Okay, so once you flip over the line, it's almost like you're playing like volleyball. When the ball is on this side of the net, you're playing defense. When it's on this side, you're playing offense. So it's like, this is support, and then this is resistance. So these are the lines you want to see if you break through. And the candles are just giving you. So if I want to even fine tune this a bit, I can go to the top of. I can go to the top of this. To the top of the candles on each of those, right? So if I wanted to fine tune it a bit, and I can go with that again. Anywhere from here to here, it really doesn't matter, because you're talking literally from here, 53, talking 70 cents. So it's not gonna make that much difference, right? Even if you bought 1,000 shares of $73 that you talk about between here and here, it's not gonna break the bank one way or another, right? So you have discretion, but this is going to start giving you price points that you can start looking at when it gets back to certain levels. So you can almost look at it like this. So if I say this is first level resistance, all right, and then each of these you can say first support, second support. I'm gonna have to move it down because it's not in the right point. First support, the second support, third, fourth, so on, right? And what should happen is when you break support, so look at this here as an example. The support points, as you break through each prior support point and you head to the lower one, your support should get stronger as it descends, right? Now, this is something that we haven't talked about before, and it's a good point to bring it up. I want y'all to look at this. That's volume, right? Look at what happened once it hit this high. Look at the next day. Look at this day. Look at this day. You got huge volume coming in at levels prior to that move to your left and after that move to your right that it did not experience. So there's a lot of movement in these 5 to 6 trading days here. 1, 2, 3, 4, 5, 6. You see that? So
is that people mostly selling because stock was dropping?
Great question. In the chart is going to tell you. So that green bar with the green volume here, that means that was up volume, whereas these red bars represents down volume, meaning that it was more sellers selling a lot of shares on these red bars than it was green buyers on these green bars. So volume helps to determine turns, should I say, or pivots. So you can say here, that big volume out of here, and it stopped down here. So think about it. even though it's dropping like a rock, every sell has to have a buyer. So you got a bunch of people buying here, they were wrong. Got a bunch of people buying here, they were wrong. Got a little bit less people buying here. Well, you got a lot of people buying here. It's just that they bought in a very tight range, meaning that there wasn't many people willing to sell in this bar. But it broke through this resistance point, and you got a whole new class of sellers here. But it got exhausted, right? All those sellers got exhausted because everybody that was selling, you had buyers there. And then here, you had more buyers coming in to buy it back up. And so if you looked at this as 1, 2, 3, 4, 5, and then you looked at these green candles as 1, 2, 3, 4, 5. If I treated this as one bar, like this, wrong. Well, sorry. If I treated this as, I'll start with this one. If I treated this as one bar, you can really collapse that to one bar and said that you had a bunch of buys and downs, but they really washed each other out.
Mm-hmm.
You see that?
Hey, Mike.
Yes.
So I officially bought this at 60.17.
60.17? 60.17 or 50.17?
60.17. I just bought this like maybe Monday.
Okay. So Monday would have been, oh, okay. I'm looking at a weekly. Let me go to the daily. All right. So here's a daily chart. So you say you bought it 60.17. So it's Friday, Thursday, Wednesday, Tuesday, Monday. Yep. No, it must have been Tuesday. Yep. 60.17. Yeah. Yep. Right here. Mm-hmm. I see that. So even on there. So look, even we're drawing that on a weekly chart. Look at how this 54.60, 53.64 line held. Came back through, and now Kyle said he bought at the 60 level, but if he had saw this at this 59 level and it broke through this area here, you got precedence, right? You got this area. You got this area here. You got this area here. And you got this area here. So really, this is a triple top. And there was enough pressure in the stock to get it to break through those 3 resistance points and close above that line. So if I just drew a horizontal line here, you see that? It was enough pressure, buying pressure in that stock to elevate it around all of that junk below it and to take it out and establish a new uptrend. But if you're not charting this stuff out and looking at this, you would just, so this is what it looked like if you wasn't charting. What can you make from that? Nothing. So these lines and stuff, I'm telling you guys, it makes a difference just because what we just previously had there, it just gave so much context. I mean, we're looking at the same stuff we're overlays and we're inferring data from what we see. So, any questions?
Nope.
Cool. Anybody else got any stock they want to look at? Darren, you got anything you want us to pull up and we can work through an example for you? Maybe he's gone. Anybody else? Any other stock we want to pull up? So I want everybody at least to get their trading views set up, start building out their watch list, start drawing their support lines. Oh, and I didn't say this, but Sharif and Darren, if you want to draw a support line, you just move it anywhere on the chart. You hold down the Alt key and you hit the letter H and it'll draw a horizontal line. Once it's drawn, you can go back up here and click the crosshairs. And if you highlight and you get this little blue anchor here, then you can move it up and down as you want to, if you want to readjust it. And then as long as it's highlighted and you say, you know what, I don't want it anymore, hit the delete key and it goes away.
And so that was, you said hold down the Alt key and press H?
Yes, sir.
Okay.
Mm-hmm. Yep. So, who else we got? Sharif, Kyle, Ken. All right. Ken, you got anything? I know you bought some stuff this week. Do you want to share with the group some of the stuff you bought?
Yeah, so I bought PEP, PEP is PepsiCo. Because I was looking at the chart.
We don't have nothing to look at, Ken. You're gonna have to tell me what to draw.
All right, let me try to see if I can see the screen. See here. It's at 140. So what are you trying to draw? Support and resistance?
Yes, sir.
All right, so I guess for support, you can go down to you have your mouse on? Oh, I see it there.
Mm-hmm.
You got it at 118. So I'm looking at the right side. If you go up to there, yeah, right, back down. Down a little, up a little bit. You can draw a line right in there. And then, of course, with your resistance, you can go. Try to zoom out so I can see. At one, there's multiple lines that you could draw. But I guess for the first part, you can do like right above, below, what's that, in between 142 and 146, and then you can go, yep. You can go up at the, you can do another one right there at, before 146, right around in that area. Yep, right, back up. There's like multiple points touching. Yep, you can put another one there. I mean, it's a lot of lines you can draw on here. And so the reason I bought it is because I saw it at that 135 area. And I did some research on them, and apparently they pay out pretty good dividends. So this was more so one of the companies I thought, hey, I'm going to hold them for a long term. And I found out something about PepsiCo that I didn't know. I thought it was just the drink, Pepsi. Then I found out they do all of these, different little snacks and chips and all that other stuff. And I was like, you know what? I think this might be a good buy. And sure enough, it's been a pretty decent buy. So.
Good job. I'm glad you brought that out, Ken. So one of the things with TradingView, if you go down here and you have your news, not news, what is that?
Oh, and I'm sorry, Mike and Kyle, they were teaming up with Beyond Meat. I said, Kyle always says, when a company teams up with Beyond Meat, their stock goes up. So that's when I
know they teamed up with Beyond Meat.
That joker awake now. When you say Beyond Meat, he just come out the woodwork. That joker be playing hide and go seek. They holler Beyond Meat. He just gonna tell on his stuff. Yeah, so I'm glad you brought that up, Ken. So you see here when you have your watch list on, and so if I turn my watch list on again, and this little thing here will give you for whatever the active stock that you have on, it gives a little context here. What you can do is click on the name and it has this little arrow box out too. What it's going to do is take you out to another screen for PepsiCo. And you can look at a little bit of the, it's going to show the chart again, but I'm not really interested in that. It's really, you can look at the technicals, you can look at the balance sheet, some of the fundamental stuff that we talk about. You can look at the profile. So like Ken say, I knew that they sold Pepsi, but I didn't know that they sold Frito-Lay, Gatorade, Quaker Oats, or Quaker, Tropicana. They operate in 6 segments, Quaker North America, beverages, Sub-Saharan Africa, Asia, and the Middle East. The Quaker includes cereal, rice, pasta, and other food businesses, United States and Canada. Latin America does the same, blah, blah, blah. Then he talked about the dividend. So you can go down and you can use this information to your advantage because it's all right here in the platform that, hey, said Thursday lifted its quarterly dividend 7% to $1 and $1 a share. So what happens is for every 1 share that Ken owns, he's going to get $1.02 if he owns it through March 31st. So if you have 100 shares, you're going to get $102 dividend back on that. And that's a way to lower your cost basis. And a good point. So in your stock accounts, when you buy a stock, if it gives you the option, and most all the brokers do, it'll give you an option to say, do you want to reinvest dividends? If there's a checkbox or an indicator for that, always click on that. Because what happens is when they pay Ken out, let's just say Ken has 100 shares of this. When they pay Ken out for his 100 shares, that's going to be $102, right? What they're going to do at that point, if you don't have it checked, they're just going to put $102 in this account. But if he does have it checked, they're going to take that $102 and they're going to buy more PepsiCo shares based upon that current price with those $102. So he's going to get more shares. So what happens is it brings your cost basis down, meaning that let's say you paid $7 a share of those. He gets he gets $1 per share. That means his cost basis now is not $7, but $5.89, because you take the dividend amount minus what you paid per share and you subtract it out. So that lowers your cost basis. Does that make sense?
Yep.
Okay.
Yes.
So that's a way. That's definitely a way to earn. And so old people, what they do is they look for companies that pay good dividends. So what they do is they invest a lump sum of money into these dividend paying companies, where they try to hopefully that they're not fluctuating too much, and they use that income to live off of. So let's say if you had $1 million worth of PepsiCo, you get a dollar a share. So you said $7. I don't know. Let me see to do the math. So you got 100,000. What is that? That's 100,000. Take $1 million divided by what's PepsiCo trading at, Ken?
Now it's like 140 something.
Right. So you say 140. So you got 7,100 shares, right? So they're gonna get a dividend check for $7,000.
Wow.
So and so that means they're not even touching their principal of their investment, and they can just use this and live off of. So that's a quarterly dividend based upon this. So you're gonna get it 4 times a year. They just upped it, but you're gonna get it 4 times a year. So you do that, and you say this. That's what $1 million in Pepsi will do for you just on dividends. I think that can buy enough milk and car payment and all that stuff, right? So that's using your money, using your money for you. Now you may say, man, everybody ain't got $1 million. Okay, so all right, you got $10K. That might be $280, $285 a year. You only got $1,000. Okay, $28. That'll get you a meal. Okay. So
and then
everything's.
I'm sorry. Go ahead, Mike.
No, go ahead. That's it.
No, I was going to say on that and along that line, the other, I guess, dividend paying company that I bought stock in is AT&T. They have a higher dividend rate. Just trying to look for some long-term companies that I think would be, pretty decent. And for the most part, they seem to be holding in this little horizontal, I guess you would say, horizontal trend for right now.
Mm-hmm.
So I went ahead. I can't remember what I bought. I think I bought it was probably like what is it now? I can't see the.
It's at $28.93.
So I'm pretty sure I was in the 28 range.
Okay.
But apparently they have a higher dividend rate, and so I bought, a couple shares. I don't remember how many shares I bought, but my plan is just to keep buying shares in certain companies. I bought Apple as well. Certain companies that I'm thinking that would have the propensity to, their stocks to go higher in the future, and also get some kind of dividend paid in the process.
Yeah. So a way to figure out, and they actually compute it for you. But if you want to compare companies one to another, so I actually got PepsiCo. Let's see who has a better dividend. Just pure dividend yield. So Ken's right. AT&T has a better dividend because you can look at the yield. It's 2.92 versus the TD Ameritrade, not TD Ameritrade, but AT&T pays a 7% yield. And all yield is the amount that they pay you divided by the price. That's all it is. So the total yield for the fiscal, so four quarters will give $2.08. You divide $2.08 by 28, you get 7%. Yeah. So that's all, and that's the way you can compare yields from one another. And a lot of times they compute it for you already. So if you just go here and look at the yield, just see what's the biggest absolute number between the two, and that's your answer. Now you do want to factor in stock price, and sometimes it could be where you enter the stock at too could make a difference as well, right? So if you got a good entry price based on a recent downturn, your yield may be better than what's printed, because the printed yield is always going to be based on the current price. Yeah. Yep. That's it. Well, guys, I gotta jump for another meeting, but I definitely appreciate good session. New guys, I hope you all enjoyed it, learned something. Darren, I'll get with you and we'll go over some of that more basic stuff, as well as Darren Sharif. I'm gonna send you all a text to some links of some of the stuff that we have recorded, so you all can watch it in your leisure. Got any questions, take notes, and then next time we talk, we can go through and cover those.
And I appreciate it, man. Very informative, man. I took a lot of notes, so good. Learned a lot.
Good stuff. Yeah, and appreciate your participation, and keep on coming back, man.